Hi, everyone. I am really excited that you decided to spend this next about hour with us as we talk about our newest investment opportunity, which is the park at Arlington and how we can partner and grow together. Again, I said it earlier, but if you didn't hear, please ask lots of questions. One of the things that I'm really passionate about is education. I'm really helping to distill information that a lot of us really are not privy to, and some of us don't understand. So no question is too small. It's okay if I talk about it and you ask it a second time, I will still respond to it. I'll still answer it. But I wouldn't be here today. We wouldn't be here today without our Pheenyx Capital community. So more than anything, before we jump in, I want to say thank you. I want to say thank you from the bottom of my heart. It gives me great joy to come here every time as we continue to grow and as we continue to partner together. So let's go. Before we get excited, I want to take a moment just to address something that's really important. A lot of us on this call are accomplished professionals, and so you understand the value of thorough due diligence in anything that you decide to do, invest in, any opportunity you decide to embark upon. So do the same with this, right? This information that I'm sharing today is really exclusively for our invited guests. So while I'm really excited to share this opportunity, right, I really encourage you to review everything with your trusted advisors, because that's what we do as sophisticated investors. So let's get into what really matters, which is the park at Arlington. But first, I want to tell you a little bit about my story and my journey and how I get to be sitting here today talking to you. And I want to tell you a story about really, again, why I'm here, why we're having this conversation about real estate investing instead of me being in the emergency room right now. Because honestly, that's what I was supposed to do. I was supposed to be a doctor. That was the plan. That was my dream. Go to medical school, become an ER doctor, save lives, make good money, live a good life. It was a simple plan. And for a while, it was exactly what I did. I loved emergency medicine. You know, the intensity, the rush, the problem solving, you know, the ability to help people at the worst times of their lives, right? The hardest times is when kind of they encountered something wrong. And I got to be that doctor who helped them along that journey. But then something happened and something changed this perfect dream that I had. Maybe that's part of the reason why I'm sitting here with you today. And a private equity firm bought our practice. And at first, you know, I didn't think much of it, you know, new management, same job, right? I was very wrong. Because within months, everything just started changing. They started cutting our hours, and they said they would cut it within reason because that was actually stipulated in our contract. But those within reason hours ended up looking like 50, 60 hours. And then they did something even worse. They started firing physicians, good, hardworking doctors. And the focus shifted a little bit from patient care to profit margins, right? And I remember sitting in a meeting, I remember this so well, where we were told that we needed to see more patients per hour. That word PPH, our PPH was low. They said we need to increase throughput, another word. And that's what they called it, right? I became a doctor to save lives. And then I found myself just being a line on a spreadsheet. And it hit me, right? I remember that meeting so well, it hit me. I didn't have job security. I'd spent years in medical school, years in residency. I built what I thought was a stable career. And then some firm, some company that I had never heard about just came and changed the rules. I had no control, and that scared me. And you might be on this call today, right? Kind of thinking you're here because you want to hear about the park at Arlington. And maybe this resonates with you, right? But I started thinking about ways to create passive income, something that did not depend on me trading my hours for dollars, something that couldn't be taken away from me at a split-second decision. And so I stumbled upon real estate. And for me, I learned about real estate syndication because I was looking for something else. I was thinking about financial freedom and wealth. And I stumbled upon real estate syndication. And it was very simple, but I didn't know about it. All we were doing was just pooling money with other investors, and we were buying apartment buildings. I made my first big girl investment. I was terrified, but I did it. And then something magical happened, right? I started getting these quarterly distributions that started hitting my bank account. I was getting, something called a K1. So I was getting all these tax benefits that were reducing my tax bill, and the property was appreciating in value. And I was like, I'm not trading my time for this. I wasn't dealing with patients, insurance companies, private equity overlords. I wasn't doing any of that. It's just this investment was working for me. And so for the first time in my life, I understood what it meant to really have your money work for you instead of you working for that money. And this is what really got to me, right? It wasn't hard. It wasn't complicated. There wasn't some secret strategy that was only available to the ultra wealthy. It wasn't any of that. It was just a different game, a game that I had not been taught to play. And some of you might be on this call, some brand new investors who didn't even know that this opportunity exists. And once I learned the rules, right, everything started changing. I went from being terrified about job security to really having multiple streams of income, right? I went from hoping that my employer would value me to really not even caring what my employer thought. And that was such a big change. I went from an employer to an owner. And that's what I want to talk to you about this afternoon, because it's so important for you to realize that difference. And I built Pheenyx Capital with one mission in mind. And that mission was to bring opportunities just like this to our communities so that wealth generation is not foreign, so that wealth generation isn't scary, so that wealth generation isn't something that other people get to participate in and we don't. Because I realized that a lot of high income professionals, you might be on this call, you might be listening to this webinar recording, right? Doctors, lawyers, engineers, business owners were in the same trap that I was in. You work hard, you work so hard, you make good money, you save that in your 401k like you're supposed to, but you're still trading a lot of hours for dollars. You don't have real financial freedom because you don't even know about the access. And you are still one corporate decision away from kind of having your whole life disrupted, maybe changed, maybe even having to move, right? But nobody ever taught us that there was a different way. And yes, there is a different way. And that's what I'm going to show you today, right? I want you to think about how the ultra wealthy, the billionaires, how I want us to start thinking about how they think about investing. So I want to show you 3 questions or 3 secrets that they ask about every single investment opportunity that they want to participate in. And then after that, I'm going to show you the park at Arlington and how you can know exactly how this happens and how you can play a part in really figuring out what your financial future looks like. So, and it's not through Wall Street, right? It's not through the middleman. It's directly. It's us partnering together, coming together and buying these institutional grade assets because now we know about it. Now we can play the game and now we have access. So this is what we're going to be covering today. I'm going to teach you those 3 questions that, again, all billionaires ask about every single investment. And those are the 3 questions that are going to separate you from an investor who's thinking about building generational wealth legacy for you, for your family, for your kids and their generations, and not just hope that your 401k works out according to plan. I'm going to walk you through the park at Arlington, which is our newest deal, and how that checks all the boxes that these billionaires ask when they invest. And by the end of today, I want you to be thinking about investing differently. I want you to understand what's ahead of us with our current strategy and how we're going to do it together. That's really what I want to talk about. And so today, secret number 1 is this. Billionaires, they only invest in assets that have a fundamental reason that they are going to grow in value. That is the most important thing. They don't hope, they don't speculate. They don't wish that the market is going to go up eventually, right? They look for structural growth drivers, ways that whatever investment they put in is going to grow. And I want to show you what I mean, right? So Blackstone, think about the likes of these large institutional investors. They buy apartment buildings and they don't hope that it goes up in value, right? They look for population growth. So wherever they're buying, right, they want to make sure that it's growing. That same where they're buying, they want to make sure jobs are being created. They want to make sure that there's a lot of infrastructure improvement in wherever that they're investing in, because that investment has to grow. They want inevitable growth. They don't just want it to like hope that it might grow, think it might grow. Now think about your 401k, right? You're hoping that the S&P 500 is going to go up. And maybe it does, right? Because we have time on our side. But then maybe it doesn't. Maybe we hope for another 2008, or maybe we have another 2008, right? Or maybe we have another pandemic. What does that happen to your 401k, to your stocks, right? That's not how they think. So that secret that I want to ask you, I want you to think about is, does it grow? Not maybe, not wishing, not hopeful, right? But does it have a fundamental structural way that this is going to grow? That is the first filter. And I want you to be thinking about this. And I also want you to think about it in now everything that you think about investing. These are the questions that I want you to keep asking. Secret number 2, they will only invest in assets that produce cash flow right now. Again, it's not someday. It's not when you retire. It's now. It's not when you sell, but is it cash flowing today? And that's the difference between investors and speculators. So when the likes of Blackstone and the billionaires and the institutional investors, when they buy property, right, it is cash flowing day one. That's what I want you to be thinking about. Now think about your index fund. You maybe get 2% in dividends if you're lucky. And then you pay full taxes on it, right? That's not cash flow. Maybe it's a rounding error, but really, is that what we want, right? We need to start thinking like real investors that want assets to pay them while they own it, right? From day one. Think about it, right? Some of us on this call are rental owners. They own rental property. You collect rent every single month. That rent pays you. There are also some of us on this call who are business owners, right? And those businesses, they generate profit. The businesses pay you. That's what I want you to start thinking about. But if you own stocks, you're just hoping that maybe the price will go up someday. And maybe it does. But I think we should start thinking about something that has a little bit more foundation, that will grow today and that is cash flowing today. So question number 2, secret number 2, does it pay? Does it put money in your pocket, in your bank account today, every quarter? Not maybe, right? That is the second filter. And that's what I want you to think about. And this is secret number 3. I think this is the best one of them all. And that is a secret that not a lot of people talk about. We are starting to bring it up. We're starting to talk about it because it's so important. But these wealthy billionaires, they structure their investments to legally minimize or completely eliminate taxes. And this is the secret sauce. And this is how they stay uber wealthy. I want to show you something that maybe is going to blow your mind, because it did mine when I first started learning. And a lot of what I want to do is continue to educate you so that you can make the right decisions. When you buy stocks in your brokerage account, right, you pay taxes on the dividend. You pay capital gains when you sell. You literally pay taxes on everything, right? That is zero tax benefits. The government takes a cut. They take their cut every step of the way. Now, when institutional investors, when they buy this real estate, right, they use depreciation to create paper losses, right? And I'll tell you about that. They use cost segregation to accelerate those depreciation and those deductions so they can get it in year one. And then they use something called a 1031 exchange to defer their capital gains to a later time, right? Again, they're legally eliminating or they're deferring a lot of their tax burden. Same asset, which is real estate. But when you buy that real estate stock through Blackstone, right, they get the tax benefits and you pay the taxes. That is the difference. But when you buy it directly, when we partner together, when we grow together, you also get the tax benefits. So secret number 3 is, does it save on taxes? Can you legally keep more of what you make? That is the third filter. And I want you to think about it. So I'm going to reframe your mind on those 3 secrets. Does it grow? Does it pay? And does it save? That's how I want you to start thinking about every single investment opportunity that someone throws at you, that someone brings to your table. Even as we talk about the park, right? I want you to think about it from that new lens. That is the lens that I want you to evaluate Park at Arlington. So I just wanted to, again, this is kind of what we've done. You know, in the last 4 years, we have partnered with investors, with our community, to bring these assets to you guys. And so that's what this looks like. And I want to show you really how 2 of them are performing. And yes, we will talk about the park. This is Grove Park View. We acquired Grove Park View in March 2025 for $49.1 million, with a lot of our investors on this call. And I could tell you today that it is cash flowing. We started renovations about 2 months ago. And I remember telling some people when I had this call, one of our plans was to really take some of the studios and convert them to 1-bedrooms because they were that big. And we did that. We tested our first studio to 1-bedroom conversion plan that we created, and it's doing well, right? And we plan to do the rest over the next year, year and a half. Our investors are receiving quarterly distributions already, and occupancy is strong and it's continually growing. Again, right, this is in theory. This is what we're doing right now. This is how it's working. And this is what this looks like. Again, this year, right, we closed on the Rise. And it's another property that we're kind of executing the same playbook. We acquired it in August. As of today, it is 99% occupied. We look for, again, properties that can grow, that are cash flowing and have tax benefits. And distributions are on track to start in January. We know how to find these deals. We know how to execute. We know how to deliver these returns, and our investors can confirm it. So that's what this looks like. Again, those 3 questions, those 3 secret, those 3 lens, that is how I want to talk to you. I want you to think about the park at Arlington. The Blackstones are acquiring these institutional grade assets, and we get to do that as well, right? We get to come together and we get to partner. And so I told you I'd talk about the park at Arlington, and this is it. But I wanted to really drive home those points, because again, if not the park, it will be another opportunity. But that is the lens that I want you to start looking at every deal. And so this is the park at Arlington. It is a 188-unit garden-style community. It was built in 2001. It's 94% occupied right now. It's not distressed. It's truly a quality asset that is already performing. And our job and our goal is that we're going to purchase it with you guys, and we're going to perform and make it better, right? The current owner has invested about maybe $8,700 per unit in capital improvement. So that's how much they have upgraded. That's how much they used to upgrade each of the units that they've already upgraded. So a lot of it is turnkey, which means we're going and we're just going to manage it better, right? So there's some of you on this call who have been very excited to hear about our newest opportunity. So if you're on this call and you are already ready to jump into this opportunity, right? My team is going to put up a link, and it's a link to our portal. And this is where you can soft commit right now, and then get excited to partner with you as we grow and as we continue to build. Before I forget, this opportunity is only available to accredited investors. So here we go. Again, I told you the park in Arlington was built in 2001. We are purchasing it for $33 million. And the best part about this property is that it comes with an assumable loan of 3.5%. I want to say that again. It's 3.5% is what we're paying for the loan on this property. If you checked and saw what interest rates are today, it's somewhere between 6 to 7% range in commercial real estate, and we're getting it for 3.5%. That assumable loan is worth its weight in gold, just that, because what that means that it's better cash flow already from day one. It means that we're protected if the rates go higher because it is fixed at that 3.5%, and that also means stronger returns for you. That is what that number means. Now, I want to tell you why I get so excited about this deal, why it really gets me excited, because I have seen a lot of deals. Our team reviews, underwrites a lot of deals, and we have passed on most of them because some of the deals are fine. They're okay, and they might work out, but we have to make sure that we stress test these deals on every single form. And the park at Arlington is different, right? It's one of those rare opportunities where everything lines up at the same time. And we found something just like that. First of all, The opportunity itself, the property itself is great. You know, I told you it's not distressed, it's not falling apart. It's 94% occupied right now, right this second. People want to live there. The fundamentals are working. Now, when you add that and you layer in the market, which is where it's located in Covington, Georgia, you know, you have Rivian that's building their massive EV plant. You have the Facebook data center, Meta data center that is already operational. Let me tell you what that means. That means billions of dollars in investments that are creating thousands of jobs in that area. That's the piece of growth that you want to be a part of. And that growth is already locked in because they've already started. Meta's already there and Rivian has already broken ground. That's why we love this deal. And so when you put all of that together, right, we're buying this asset that is already working in a market that is about to explode. And it has a clear, you know, value add plan that is already proven because the prior owner has already been doing that. And to layer it all, which is the best, we have financing that is better than anything that is available today. You know, that's how you have to start thinking again about every opportunity. These are the questions you should be asking, you should be thinking about. So that's not just one good thing, right? Those are 5 good things that are happening to this property at the same time. That's what I meant when I said to be thinking and to be investing like billionaires, right? They don't just look for fine deals. They wait for deals that everything lines up, right? And this is one of them. And that's exactly how I want you to be thinking. So again, why this opportunity, right? 37% of the units have not been renovated, and that's more than a third. So that is where opportunity comes in, right? We have a proven renovation program that works because we've seen it happen, right? The prior owner has done it. And that program is going to generate about $355 per month in additional rent per unit. So this is the best part, right? I want you to understand this. Brand new properties that were built in like 2022 and newer, they're getting about $1,700 in rent per unit. We're at $1,444. So that's that delta, right? That difference, right? That's an immediate upside as soon as we purchase the property because we can now bring those rents to market. So bring it to that $1,700 value that it is. Again, remember what I told you that when you buy from day one, it should start cash flowing. This is exactly what I mean, right? Find the embedded value or make sure that you're partnering with owners and operators who can see that embedded value and then have a clear plan that they're ready to execute from day one. Ways to create those returns that are so important and an excellent team to do it with. That's how you should be thinking, especially as a passive investor. So a lot of you who have reached out to me asking like, what do I get, right? This is what you're going to earn. Cash flow is going to be about 6 to 8% every year, and that's going to be paid out quarterly. That's real money in your account. And then I told you about the tax benefits. So that's $45,000 in deductions per $100,000 that you invest. That's another benefit on this. And then I want you to also understand how appreciation works. And so as we execute on our business plan, which is renovations, right? As those jobs start coming, as the market starts growing, conservatively, right, we think we can increase in appreciation value of this property by like 15 to 25%. And that's holding it for a kind of 5-year period, right? We say 5 to 7, leaning more towards 5 years. But that's how you start thinking about cash flow, tax benefits, appreciation. Your returns look like anywhere from 15 to 17% yearly. And that's conservatively based on what we're seeing today, based on the assumptions we made, based on the market today. It could definitely do a lot better. So now I want you to compare that to the S&P 500 at 10% with no tax benefits and full capital gains, right? That's how you have to start thinking. And I'm a fan of diversification, but this is something you have to start thinking about. How can I bring real estate into my portfolio? Okay, so these are the investment terms. Minimum investment is $100,000. We're targeting to close within the next 75 to 90 days. I told you again, it's going to be around a 5-year hold, and that's enough time to really execute our business plan to go in, improve rents, start doing renovations, and really maximize the value. You're going to be receiving quarterly distributions, and it's completely passive. That means you don't manage anything. You don't have to deal with tenants. You don't have to deal with toilets. You're just your partner but you are a limited partner, and that means you get to benefit in all of the upside. We find the deal, we execute the plan, and then we get the returns. Okay, so remember those 3 questions as we kind of come to a close, and I want you to think about those 3 questions, and I'm going to bring it up here so we can talk about it, and then stress test it against how billionaires think and how they invest. So this is the park. The first question I told you to ask is, does it grow? Again, I told you that the park at Arlington is situated in Rockdale County. And in the last kind of 5 years, there has been significant growth. And over the next 5 years, there's going to be about an 8% population growth. We get to benefit in all of that. And that is not even the crazy part, right? But from 2010 to 2019, 0 apartment buildings were built in that county. That's none, right? So that was an entire decade about where there was no new supply, but the population kept on growing. So what that means is that there was such a massive supply shortage with a lot of demand. Now think about what I told you that's happening in the next like 5 to 7 years, right? That where there's going to be an addition of like almost a little over 6 billion in economic development that's happening right now. So that's Rivian that's coming in with that's building a $5 billion EV plant, and they're going to hire about 75 new jobs. And that's 15 minutes away from the property, right? And so Facebook Meta, that data center is already operational, and that was $2.5 billion of revenue that came into that county. And then think about like, there are other places like Little, Archer. There are also others are bringing in more jobs into the area. So that's almost 10,000 jobs that are going to come online in the next like 12 to 24 months. Now, the question you should be asking, right, is where are those people going to live, right? Where are they going to stay? Well, the park at Arlington is just 15 minutes away. So that gives them an opportunity. So does it grow? The answer is an obvious yes, right? Because we're not going to hope that the market goes up, right? We have almost 10,000 reasons as to why it is doing that. And I just proved that to you. That's the difference between your 401k and this investment. Question number 2, does it pay cash flow right now? So the last 12 months, right? Park at Arlington has been generating 1.7 million in net operating income per year. So right now, that's what the financials are saying today. That's even before we do anything, right? And that means that from day one, it's already cash flowing. You're getting quarterly distributions that are deposited into your account. And it's not someday. It's not, again, it's not when you retire, because who wants to wait for, if you're in your 30s, who wants to wait another 30 years? Or if you're in your 40s, another 20 years or 20 plus years, right? You don't want to wait for like when it sells, right? You want now. And so that looks like about 6 to 8%, cash on cash. So that's returns you're getting from day one as we grow, as we execute our business plan, as we start doing renovations. Now compare that to your index fund, right? What are you getting from that? So the next question, again, you should ask is, does it pay? And it does. And it looks like every quarter. Real cash that's sitting in your account 4 times a year. That's how I want you to start thinking. Again, I keep saying it because these are the lens that you should be looking at every opportunity through. And the third one is, does it save on taxes? And this is where the magic happens. This is where, if you're on this call, if you're thinking about investing, you should get excited, because a $100,000 investment in the park at Arlington is going to generate about $45,000 in tax deductions through depreciation and cost segregation. Let me say that just a little slower so that it sinks in, right? You invest $100,000 and you get $45,000 in paper losses. Now, if you took that same $100,000 and you bought a Blackstone stock, right? What do you get in tax benefits? The answer is 0. In fact, you're going to pay taxes on those dividends. And so I want you to see what's happening here, right? And this is what I want to kind of drive home. You're investing in that same asset class, but they own the apartment buildings, but now we can own them as well, right? When you buy their stock, they keep the tax, they keep all the tax benefits, and you pay the taxes. So the question I ask you is, Does it save on taxes? And the answer is clearly yes, right? This is how the ultra wealthy become wealthier, because they are taking away the middleman and they're investing and they're buying these properties. Different game, different rules, different results. We want to be at the beginning. We want to be at the start. We want to buy it. And so that we can get all these benefits from you, all these benefits for you, for us. Okay, so let's test this against like what you probably own right now, right? Your 401k, index funds. Set it, forget it. That's kind of how you think about it, right? That's a portfolio that we're encouraged to buy, that everyone tells us to go and buy. I just want you to know what happens and to know like how others are playing and winning. So does it grow? Your 401k, the stocks in there? Sure. I'll give this one a point, because historically, right, the market is going to go up. So maybe it will grow. So I'll say yes. Does it pay? You get 2% in dividends if you're lucky, but then you pay full on taxes on every penny. So I'm going to say no for this one. I'm just going to say no. Does it save on taxes? The answer is clearly no. You pay taxes, dividends, you pay capital gains, everything. So if we had a scorecard, right, this is going to score 1 out of 3, maybe 1.5 really, but really, if I'm not being generous, which I'm not, it's just 1, right? And that's a terrible grade. Now, I showed you the park at Arlington. Let's do it, right? Does it grow? We talked about it. In the next 24 months, you're going to see about 95,000 jobs, 9,500 jobs come into the market, right? And then plus that 10-year supply gap that just increases demand, right? So does it grow? The answer is yes. Does it pay? You're getting cash flow from day one. You're going to get quarterly distributions. I've shown you how. So the answer is yes. And does it save on taxes? We talked about this, and I think I drove that home. That's 45,000 in deductions per 100,000 that you invested. So that's 3 out of 3. That's how you want to start thinking. These are the type of deals that institutional investors, they want to buy if they find it first, right? This is what they want to go after, so that you can then come at the bottom after they get all the benefits. Today is the opportunity to invest just like them. These are the things that we talk about. These are the things that we talk about here in our community. These are the opportunities that we bring. So you have 2 choices right now as you're sitting here, as we come to a close, because I want to save time for questions. Keep doing what you're doing. Keep investing through Wall Street. Keep settling for 1 out of 3. You're going to be okay, but you're going to be paying in taxes, and you're going to keep hoping that it works out. Or you could do something different today. You can invest just like how the billionaires invest and score 3 out of 3. Keep the tax benefits. You get the quarterly cash flow. And then you start thinking about building real wealth, right? I cannot make that decision for you. But I will tell you this, right? That Rivian EV plant is going to be built, whether you want it or not. And it's already starting, right? All those growth drivers are already coming to this area where this opportunity is. And so those 9,500 jobs are coming. You know, the highway project that they're about to embark upon is happening, whether or not you decide to invest in this property. So in the next 12, 18, 24 months, right? This opportunity or opportunities like this will be obvious to every single person. When it's that obvious to everyone, it's going to be already too late. So I want you to think about it, that the window is now. You have 2 choices. Someone told me actually earlier today that time is so short, and that whatever decision that you want to make, right, you should make it right now, because before you blink, it's going to be 5, 10, 15 years. So imagine if you started today. Imagine if you made that decision that I'm going to think about growing wealth. I'm going to think about starting to get passive income, but I'm not only thinking about it now from just me. It's for family, and it's for legacy, and it's for generations to come. But it starts with you making this decision today. So if you want to move forward, again, here's what's going to happen. There should be a link on your screen. I think one of my team members is going to put it up. Click on it. It's going to take you to our portal for you to be able to soft commit. From there, right, as soon as you do that, The team will schedule a call with either me or someone else on our team, and we will review your specific situation. Make sure that this is the right fit for you. And then after that, you'll get access to all the investment documents. You'll see the full investor deck. You have time to review everything because we're sophisticated investors, and that's what we do. You have time to do your due diligence. You will submit your commitment, you wire your funds, and then you're going to be in. And then from that point, after we close, you will be receiving quarterly distributions. You'll get that K1 I talked to you about, so that you'll be able to claim your tax benefits. You will get monthly updates from us. From me, you'll be able to see how the property is doing on a monthly basis. And then we'll do a quarterly call where we will come in and talk about every quarter how the investment is doing, how it's growing, the changes that we made, the decisions we made. You get access to all of that. You're privy to all of that because you own this property. And then in like 5-ish years, right, we sell, you get your capital back plus all the appreciation that you saw. That is how simple it is. And that's our plan. And that's what we want to do. And so these are funding options I want to talk about. I'm going to spend just a little bit of time on this. The first way you can invest is with cash. And once you get on the portal, you have access. You see the wire instructions. Everything is on the portal. But there's another way that you can invest. And that is with an old 401k or an IRA that you convert into a self-directed IRA. So again, these are opportunities that no one tells us about, but we have access to it. And so we have a custodian that does everything for you. So go ahead, soft commit on the portal, go ahead and commit, make your commitment on the portal. And then if that's an opportunity that you wanted to tap into, I will personally connect you with our custodian who can then help you walk through all the steps. But that is an opportunity that you have that maybe you didn't even realize that you did, but you do. So as we come to a close, I want to tell you thank you. Thank you for spending this past hour with me. Thank you for the opportunity to just kind of educate you about this opportunity and opportunities like this and how to invest or how to think about starting to invest like a billionaire. I'm so grateful, and I'm looking forward to partnering with you on the park at Arlington. I will say this, right? For my repeat investors who are on this call, I want to tell you thank you. Thank you from the bottom of my heart. I'm so grateful that we are partnering together and that we're growing wealth and we're doing it as a community. We're doing it together. And for the new investors, I want to tell you welcome, because this is the beginning of something really amazing and something cool. So I'm grateful that you are embarking upon it with us. At this point, I told you that if you have questions, I'd love to answer all your questions. So if there are any questions, I'm going to leave the chat open, and we're going to pull out the questions. No question is small. No question is dumb. As much as I can, I want to kind of help you think through opportunities like this and how we can grow together. So and also on the screen is a QR code. Again, it'll take you straight to the portal. So you have, again, access to do that. Perfect. So I am going to stop screen sharing and let's pull out the questions. Why is the current owner selling property? Very good question. So they have reached the end of their business plan and they want to sell. So they've held the property for as long as they wanted to hold it for, and they're thinking about selling. So that happens often. Like this deal, right? We're going to hold it for about the next 5 years and we're going to sell it. So these opportunities, kind of the business plan is to go in, increase the value of the property, renovations, appreciate the value, and then be able to sell it so that investors can recoup their returns. So that's what that looks like. So they've done theirs. Now it's our turn to do ours. Next question. Is the cash flow distributed monthly, quarterly, or annually? It's distributed monthly. So, quarterly. It's distributed quarterly for this particular investment. Can we invest less than $100,000? So $100,000 is the minimum investment, but I will make special consideration for, especially if you have invested with us in the past. I would make special considerations if you want to come in less. But I would say, even if you're thinking about it, right, I would just go ahead and commit on the portal, and then I'll set up a call, and then we can talk through kind of special situations and take it from there. So if you're thinking about it, still get on the portal, and then I'll make time, or someone else on our team will make time, and we'll be able to answer your questions, figure out how this aligns with you and what works. Next question. Is there visibility on the financial projections? Yes, there is. So I'm not going to say if, I'm going to say when we get on a call, right? Some of this information is privy to our investors, but when we get on a call, I will show you, and we'll break down the financial projections. So the assumptions that we make, the underwritings, I'll be able to show all of that to you so you can see that. And if there are people on this call who want that information, I will make it accessible. But it'll also be on the portal. At least we'll make a version accessible on the portal, and then I can walk you through it. Now, I will say this, Yewande, it's a lot of information, so I sometimes hold back on that because I don't want to confuse you. But in simple terms, I will break it down for you. But yes, there is visibility on the financial projections. Cash flow, P&L projections. So it is, to explain what you mean by that. I think I talked about that, but tell me what you want me to break down in a little bit more detail. How do you become an accredited investor? What does that mean? Good question. So accredited investor, so in order to be able to invest in the park at Arlington, you have to be an accredited investor. That means that you have to make your yearly income has to be $200,000 or more, or you and your spouse combined have a yearly income of $300,000. That's one way to qualify. Or you can have a net worth of $1 million, and that net worth excludes your primary residence. So if you qualify, you have access to invest in these opportunities, especially the park at Arlington. Great question. Can I invest through my self-directed IRA, my solo 401k? Wonderful question. Yes, you can. And we have a custodian that we work with, and we have worked with this group for the past 4 deals. Love them. They're super transparent, but they will give you all the information on how to take an old 401k from a prior employer, because you cannot use your new 401k. So like if you have one, if you've switched jobs, and it's just sitting somewhere, if you have not moved it or converted into your new employer, if it's just sitting somewhere, we can convert that, and the custodian can help you. We can convert that to a self-directed IRA, and then you can invest with that. If you have an IRA, right, of any sort that is just, something that you've been investing in by yourself, especially if you're a business owner, right, you have options also to convert that into a self-directed IRA and use that as well. As an investor, are we also getting a portion of the equity? Yeah, so yes, from appreciation, at the end, you're getting that, and that split is 70-30. So the answer is correct, yes. What are the projected IRR year 5? So it looks like it's about 14% at year 5. And then the average kind of like what you're going to be making at the end is about 18%. I think there's some more questions. I see a question. I'm going to push this question up. This is a great question. The NOI on the previous properties, that was monthly. So that was for the month of September. Great question. So he asked NOI, which is the net operating income on the previous properties. So I put how each property was doing, and that was just for the month of September. I will, there's another question. Okay, I'm going to display this one. Okay. Dr. Brown says, to save $45,000 per $100,000 on taxes, do you invest with an LLC or can you deduct from your personal taxes? This is a great question. And you can invest as a person, you can invest as your LLC or as an LLC that you created. And yes, you can get that depreciation into however you invest in the property. And so next year, I'll send you a K1, so our accountant will create it for all our investors and you will get that. And then you can just hand that to your accountant and they'll take care of it. I want to make sure, let's make sure all the questions are answered. Oh, perfect. She said, I already answered that question about cash flow and P&L. I already answered it. Great. I think maybe all the questions are answered. Are there any other questions? I think I pushed the last two up. Does anyone have any other questions? Okay. So I will go ahead or have one of our team members just go ahead and put the link up again so that you can have access to it, so that you can soft commit. And then after that, we will be, I will reach out to you. I have another question. Okay, so let's see if I can bring this question up to, okay, it's in the public, so I'll just read it out. How likely feasible is selling the property within 5 to 7 years? This is a great question. And so between second and third year, right? So first of all, let me kind of explain. So when we look at markets that we are buying in, right? Markets that we want to buy in, we'll look at markets that the growth potential is going to be past 5, 7, 10 years. That means that those deals are still good deals that people would like to buy at the time that we're looking to sell. So that's something to think about. But also between second and third year, right, we start doing something called a broker opinion of value. What that means is that the broker who sold us the property, right, we will start figuring out like how much can we get for the property if we sell it at this time. So based on the renovations that we've done, based on the value add plan, based on better management of the property, right, we will see at what point are we going to meet our returns that we projected to our investors. And at that point, we are going to sell. Now, I get this question asked a lot. So this is a secondary part to that question. What happens if you don't sell? And if we are projected to sell at year 5, and let's say another COVID-19 happens or something, right? We have the opportunity to refinance. And so that is an opportunity that we can take advantage of, refinance, hold the deal. And at that point, right, we would give you back some of your equity that you put in the deal in the beginning, and then continue to manage it and see how the market does. So that's another part if we don't sell. How do investors get liquidity before the exit if needed? This is a wonderful question. So this investment opportunity, right? I would say one of the downsides to investing in real estate is that it is long-term. And so it is something called, it's illiquid, which means that while we are managing the deal, right, you cannot take your cash, you can't take your equity out of it. So if we're committing to say we're going to hold it for 5 years, then your money, your investment is locked in for those 5 years. But if it's something that like if it's something that we need to talk a little bit more about, if this question is specific to you, again, click on the link, soft commit, and then I'll definitely reach out to you and answer that. What is the length term of the assumed loan? Right now it's 5 years. That's a really good question. And so that's why I said that we would be holding it for that period of time. Okay. I loved all the questions. You guys listened and paid attention, and you're asking really good questions. So Do you refinance? Is a question. So if we need to, yes, we will. We won't do it ourselves, but we will have a lender who will be able to refinance for us. Hello, Dr. Johnson. And I see some more questions are coming, so I'm just going to hang out as people are typing. I see people typing, so I'm just going to hang out and answer. Great. Can you give an amount? Okay, this is a good question. Let's put it on the screen so everyone can see it. The one before this. Okay, I'll just answer this one. Can you break the long term in years, 5 years? Okay, this was a question. Nope, there's a question before. I think that my team is missing. But can you give an amount in dollars of quarterly returns on a $100,000 investment? That is a question that someone asked. So when I said that 6%, so that looks like yearly from the cash flow. There are two different classes of investors, right? So I'll talk about Class B because most of our investors are Class B investors. So from your investment, like your $100,000 investment, right, you're going to get returns from two buckets. You're going to get returns from cash flow, and that's money that's coming every day. And then you're going to get returns from appreciation. Those are the two buckets that you're going to get returns from. So on a yearly basis, right, you're perfect. It's on the screen. On a yearly basis, you're going to get about 6% on your investment. And then remember when I said that the entire return of each year is about 18%, that looks like 6% per year on the cash flow. And then the rest is an appreciation that comes at the end of the deal. So that's what that looks like. It's a really good question that you asked. So yes, we do. The next question is, do you accept investors outside of the United States? And the answer is yes, we do. I see some more questions that are coming. We're just pushing them forward. The next question that was asked is, who is your current lender? So for the acquisition, we are going to be using Greystone. So we're going to use Greystone as the broker, and then our lender is going to be Fannie Mae. Because that's who we're assuming the loan from. Okay. I said 1 hour. We have 3 more minutes. The questions are still coming. So if you have any questions, don't be shy. And if you're thinking it, maybe someone else is thinking it. So I have another question. What is driving strong occupancy in the property? Perfect. It's on the screen. What is driving strong occupancy in the property? That's a great question. Number one, it's the location. So when you think about kind of the United States and where people invest, where people live, right? A lot of people, so a few growth drivers are things we think about: population, which we talked about, and location. So, so if you look at trends, right? A lot of people in the last few years have migrated from the West and have migrated to the South. So Southeast is a market that is really growing, and a lot of people are leaving the North and also moving down South. So that's a big factor. And also these Southern states are landlord-friendly states. So they encourage investing, they encourage buying, because they really do protect the landlord. And that's a good thing for you as an investor, right? So if a tenant isn't paying, we have the processes in place to evict them and bring a tenant that pays rent. So those are kind of the things that you think about that are driving occupancy in the Southeast, specifically in Georgia. And then all the other things I talked about, all of these companies, right? Job growth is another big thing. They're moving down South and they're building plants, and with jobs come people, and with people, housing is a basic human need, and people need a place to live. So all of that is driving occupancy. It's a really good question. Thanks for asking. Okay. Thank you, everyone. It's 12:59 Central Standard Time, 1:59 Eastern Standard Time, and then I can't remember what time it's Pacific Standard Time, 2 hours before, so 10:59. So I will, if there are no other questions coming in, I don't see anyone, I don't see it saying someone is typing in the chat. I want to say thank you. Thank you so much for the time. Thank you so much for this hour. This was a wonderful hour. The questions were solid. I hope that one, that you were able to learn something new. And two, I want you to, my whole goal was to give you the strategy of how to think about how others are doing it and how we should be doing it too. And thirdly, I'm really excited to be partnering with you at the park at Arlington apartment complexes. So have a wonderful rest of your Saturday. And again, feel free to reach out, sign the soft commit. We'll get in touch with you. We'll set up a call and we'll go from there. Nope, Georgia. It just asked, is this Arlington, Texas? No, it is Georgia, Covington, Georgia. Okay, sweet. Okay, everyone, have a wonderful rest of your day.